67% of all New Zealanders invest their money in a Kiwisaver plan. In this video, I'll analyze this investment scheme and explain in depth why it may not be a great option. Watch the video until the end to extract the maximum value out of this analysis. And as always set with educational purposes and is not meant as financial advice. The Kiwisaver plan came into existence on July 2nd of 2027. As of March of 2022, the assets under management of this plan were 89 billion, and the total number of people who have a Kiwisaver plan totals almost 3.2 million, with an average amount per person of about 28,000. The plan can be divided into two main portfolio styles, the conservative and growth portfolios. I'll make a breakdown in a short bit of both of these portfolios and their allocations. During the last year, 1.9 million people have made contributions to their Kiwisaver plan, which is an astounding number as the total population size of the country is about 5.2 million. An interesting bonus which comes with the Kiwisaver plan is that upon joining, you'll receive a $1,000 kickstart and you'll be eligible for an ongoing fee subsidy of $40 per year. You will also receive a tax credit that matches your contributions up to a maximum $20 per week, up to $1,040 per year, and will be paid directly into your Kiwisaver account. The rules of the fund are quite interesting, as it is not allowed for the money to be withdrawn once placed into the savings plan until the age of 65, except for these 6 special circumstances. Number 1, after 3-year contributions, only then the money can be withdrawn, only to buy a first home. This excludes the government kickstart of $1,000 and until 1st of April 2015, the tax credits. The second thing is in the event of a significant financial hardship. This also excludes the government's $1,000 kickstart and tax credits. In the event of a serious illness is another circumstance, and the fourth reason is if a person permanently emigrates from New Zealand to a country other than Australia. This excludes the government tax credit. The fifth circumstance is in the case of a divorce or the end of a de facto relationship longer than 3 years. And the sixth circumstance is death. Kiwisaver savings are paid into the deceased's personal estate. During the last year, almost 200,000 withdrawals were made, out of which 1.9 billion were made by people who turned over the age of 65, and 1.4 billion were people who wanted to make a deposit on their first home purchase. On the following chart, we can see the growth of assets in the different portfolios from 2017 until today. Also on the chart, we see the total growth of the assets under management, which is the black line. The biggest growth is coming from the growth portfolio. Then comes the balanced one, which is a mix and plays the role of a middle ground for the two main types, and in last place is the conservative portfolio. As we can see here, from 2017 until 2022, the number of people which invested in the conservative portfolio decreased from 887,000 to 855,000. While the number of investors in the growth portfolio increased by 50%. At the same time, the growth of assets was 80% for the conservative style and around 225% for the growth style. But according to the greatest investors in the world, people like Ray Dalio, Jeremy Grantham, Paul Tudor Jones, Stanley Druckenmiller, and many others, the investment world is shifting and we're entering a new paradigm. A period of high inflation coupled with higher interest rates, which leads to lower growth. In this type of world, growth stocks tend to perform very badly, and the greatest investors avoid these types of investment at any cost. So from a marketing perspective, yes, growth sounds better and more profitable, but the reality is people should be very careful with their asset allocations. As stated on the ANZ website, since inception, the growth fund has an average return per annum of 6.29%, while the conservative fund has had a return of 4.29%, and the balanced fund returned 5.43% to investors. And these returns are before tax and management fees, which means the actual real returns are lower. The balanced portfolio allocation is made up of 10% cash, 40% goes towards fixed interest assets, such as government and corporate bonds, 6% goes to properties, and 42% goes to equities, with the largest single company position being Visa, with a 0.86% portfolio allocation, and again the number of investments are in the hundreds, making it a very diversified portfolio. The growth portfolio allocation is made of 4% cash, 16% bonds, 9% properties, and 68% equities, with 3% being mentioned as others, which includes other types of property-style infrastructure investments. Clearly, the risk is much higher due to higher equity portfolio allocations. In this case, Visa is the biggest single allocation, with a 1.39% share of the total portfolio, with Nestlé being in second place with a 1.04% share. The number of investments is again in the multiple hundreds. Last but not least, we must take a look at the conservative portfolio. The portfolio allocation is as follows: 20% cash, 60% bonds, 2.25% properties, 17% equities, and 0.75% to others. While the biggest allocation is seen in the category of bonds with a 1.04% single allocation. In general, I think that these portfolios are over-diversified and they just do not offer the proper investment return. As the greatest investor in the world, Warren Buffett says, if you're going to invest in a passive fund, the only good option is an S&P 500 ETF, which has the lowest possible expense ratio. Here on the channel, I have made an analysis video about the ETF industry, and the S&P 500 ETF index is there. The average yearly return of the S&P is about 10% per year, and it has a much higher and larger track record in comparison to the Kiwisaver portfolio. Personally, I am not bullish on the S&P, but this is just my opinion, so don't take it as financial advice. Even when taken from July of 2007 until today, the returns of the S&P 500 are 6.4%, and this is before fees, which again beats the returns of the growth portfolio of the Kiwisaver plan, which has given you a 6.29% return before fees are taken. In order to achieve higher returns than this, one must invest in different individual stocks. But for this, a lot of know-how is needed. Lucky for you, I have multiple videos on the channel which teach you how to do a proper stock investment analysis for all major asset classes, and many more are planned in the future. So subscribe to the channel and leave a comment down below which stocks or asset classes do you want me to analyze next. Hit the notification bell to make sure you don't miss out any of my latest videos. And to conclude, it is always best to learn from the best, such as Warren Buffett and other greats I mention in the videos. Goodbye for now, and I'll see you next time.